Okay, so let's get started with the 3-day price action challenge. Today's day one of the challenge. I do this every year. Well, not every year. I mean, I started it last year and I'm going to do it again this year. Hopefully, I'm going to do it next year. It's basically 3 days of price action webinars. Each day is a different webinar. Throughout these 3 days, I want to teach you the basics and then some intermediate stuff and some more advanced stuff. And by the end of this 3-day challenge, I want to give you guys a kind of a good idea and a good foundation to actually start trading using price action. All this stuff I'm teaching, you can use it in conjunction with strategies you're already using, or you could use it as a standalone strategy. You could use it as a strategy that you build upon and you modify to suit your needs. It's applicable to most time frames, well, to pretty much every time frame technically, but it is a lot better if you trade it on 4-hour plus time frame, so 4-hour, 8-hour, actually 4-hour, 6-hour, 8-hour, 12-hour, or daily charts. I've been doing a lot of 8-hour trading recently and some 12-hour trading. They are a bit odd in terms of charts. A lot of brokers don't have those charts, but they are fantastic charts to trade with. But you know, all this stuff is applicable to 4-hour, and daily charts. But before we get into the actual content, I just want to go over some rules. So first rule is please keep all questions till the end. Now, you know, I just like this rule to be respected because if you guys start asking me questions during the webinar, I'm the type of person that's going to read the questions and I'm going to try to respond, and then I'm just going to get lost because I don't really prepare for these webinars. I don't really have a script. You know, I have a few points that I know I'm going to talk about, but I don't have like a word for word script. I just kind of wing it and go with it. And you know, if you guys start asking me questions, I'm gonna start messing things up. So please keep questions until the end. At the end, the last 20 minutes or so, I'm gonna open up for questions, and I'm gonna try and get all the questions answered that I can. But you know, obviously with 20 minutes, I can't answer everything. Webinar is probably gonna go longer because I usually end up spending 40 minutes answering questions instead of the 20 minutes allocated, and I still don't get all the questions answered. I may skip your question. If I skip your question, it's probably just because it's stuff I've already covered and that doesn't really need to be answered and you may have just missed it or something like that. But like I said, I'll try to answer all the questions I can. I'll try not to skip any questions, but some may be skipped just because we don't have that much time. So this webinar is going to go for around about an hour, but usually with these webinars, it ends up going longer than an hour. Ends up going, you know, an hour and 20, an hour and 30 minutes. But most of the content, or all of the content will be covered in the first hour, plus some questions. Anything that goes on after that is just some extra questions. It will be recorded. So this webinar will be recorded. The link will be emailed to you after the webinar. So please don't ask if it's going to be recorded. I always get asked that question. So webinar will be recorded. Throughout the webinar, you're going to see the chatbot spamming the FAQ constantly. This is just to remind people or people who joined in too late, that question should be left till the end and that the webinar will be recorded. So let's talk about what I'm going to cover in this webinar. In this webinar, I'm going to cover some very basic stuff to do with candlestick analysis. Now, if you've been around Forex for Noobs for a while, you're already going to know this stuff probably. If you've read anything I've written, you probably are going to know this stuff. But I need to go over it anyway because there's a lot of people who haven't been around Forex for Noobs, a lot of people who are new to trading, and it's very important to cover the basics before we go in any further and go into the advanced stuff, because if I just go straight to the intermediate or advanced stuff, people are going to be confused, they're not going to understand, and I'm always going to be tying it back to the basics. So I'm going to go over quite a few basics at the moment, but hopefully you guys who already know this stuff can endure that and can just get through these 10 minutes of basics, and then we'll get to some more interesting stuff after that. So yeah, I'm going to go through some basics, talk about candlestick analysis, and then we're going to switch over to my charts, and I'm going to show you some real trades that all members of the advanced course have taken over the past week or two. And I'm going to show you how all these basics tie into those trades and how we use those basics to actually take those trades. So over the next few days, you're going to learn intermediate stuff and then more advanced stuff, and we're always going to be tying it back to those same trades because I want you to get familiar with those trades we've taken over the past week or two. And I want you to understand every part of those trades, you know? I want you to understand the basic concepts as to why we entered. Then I want you to understand the more intermediate ones and the more advanced ones. So I want you to understand in whole why we're taking those trades. I'm not just going to show you the best, most amazing trades ever. I am going to show you some trades that were kind of difficult, that some people actually failed on and didn't hit their targets just because the trade, you know, was okay, but it was a bit messy and it didn't work out too well. I don't want to show you just the perfect setups because, you know, it's not always going to be perfect. So let's get started with the basics. Today we're going to be talking about candle charts, and candle charts pretty much tell you everything you need to know about price action. They tell you everything you need to know to trade. I don't use any indicators at all in my trading. Indicators are just not part of my trading at all. I use just candles, really. Candles are basically price. Candles are showing us what price is doing. And when you're in a trade, you need to know what price is doing. If you're in a long trade, you've bought with buyers, so you need to know who is in control, buyers or sellers, and candles tell you who's in control. So candles are just the foundation to everything to do with price action. Candles tell us everything we need to know to effectively trade the Forex market. There's just so much information contained in candlesticks, and a lot of people, they'll look at a candle and they'll just see it kind of as a graph. It's just a representation of what, where price has been and where it is right now. But candles have a lot of hidden information, and that's, for the most part, what I look at. I look at candles. You can use indicators if you want in your trading. I'm not saying that indicators are bad and that you should not use them. I'm just saying that candles should come before indicators, because candles are price, and price is what all indicators are based on anyway. I mean, pretty much all indicators, they take price, they put it through a mathematical formula, and they spit it out on a graph or on top of your chart. You know, indicators are price. So for me, I prefer to go straight to the source. Straight to the source is the candles. And that's what we're going to be looking at today. We're going to be looking at candles, basic concepts of candles. So let's get started. What's this? This is a baby candle. This candle was just born half a second ago. The previous candle closed, this candle showed up. Now this candle, we don't know at the moment if it's going to be a bullish candle or a bearish candle. It could go either way. This candle at the moment is neutral. It has not decided what it's going to be. So this candle could either be a bullish candle or a bearish candle. In this case, it's become a bullish candle. Now, when you look at this candle, what does it tell you? This candle here tells you that buyers are in complete control of the market. It's a bullish candle. It's moved up. It has no lower wick, and it has a tiny upper wick. It tells you that buyers were pretty much in control the whole time that this candle was open. And that's important information to know, because if you're in a long trade, this is what you want. You want buyers to be in control the whole time. Now, this candle here is the opposite. This candle is a bearish candle. This candle tells us sellers were in control of the market the whole time. So I know these are very simple concepts, but I just want to explain these to you guys because we need to cover the basics. And I want you to start thinking of candles as more than just graphs. I want you to start thinking of candles as a fight between buyers and sellers. When a candle is completely red or completely bearish, it means sellers were in control the whole time. When it's completely bullish, it means buyers were in control the whole time. So you got to start thinking of candles as a fight between buyers and sellers, because price is always in a constant struggle. It's always in a constant struggle between buyers and sellers. Can everyone else hear me? Because someone just said that they can't hear me. All right, cool. I'm not going to stop the webinar for the person who can't hear. Unfortunately, I can't stop the whole webinar for one person because there's a lot of people in this room right now. So I'm just gonna keep going. But Okay, so this is a single candle here. This is just a single candle. The previous one was just a single candle. A single candle doesn't really mean much. You got to look at candles as a whole. You got to look at all the candles in a group to kind of understand the pattern. So what we see here is a chart. You see highlighted areas. The red highlights are bearish trends and the green highlights are bullish trends. So what's happening in these trends? Basically, what is happening is sellers in this red area here, the one highlighted in red, sellers are in complete control of the market. Sellers are in complete control of price. So we can see that it is a bearish trend. Sellers have started selling up here, and for 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, 9 consecutive candles, sellers are in control of price. It's obvious that buyers did fight back and sellers didn't really have a smooth ride down, but overall sellers were in control of price, sellers were in control of the market. Then you have this here, the green. Now this is a strong bullish trend. This is when buyers are in control of price. So buyers took control of price, they pushed up for 2 candles. Then again, sellers took control of price, pushed down. Then buyers took control of price, pushed up. Sellers took control, pushed down. Buyers took control, pushed up, and sellers again. So the market is always moving like this because, price is always in a constant struggle. You got sellers trying to sell, buyers trying to buy, and whoever's stronger, that's the way the price is going to move. So for this period here, sellers were stronger. For this period here, buyers were stronger, sellers were stronger, buyers were stronger, etc. So the market is always moving up and down. And once we start to understand who is controlling price, buyers or sellers, we can start taking trades with whoever is in control of price. So once we understand up here that sellers are taking control of price, we can start taking short trades and writing it down with the sellers. Once we start to understand buyers are in control, we can start writing up with the buyers, down with the sellers, up with the buyers, etc. So this is what you have to picture the market as, and this is what you have to understand about candles. Candles are just telling us who is in control of price at the moment. And the more you learn about candles, the more you'll start to understand how they can tell you what is coming next. When control of price is going to switch between buyers and sellers. And you'll start to understand that when you understand the 4 stages of price, So stage 1 is ranging. Now, we all know what ranging is. When price just moves along in a certain direction and it doesn't really move up or down that much, it just moves in a tight band. Now ranging, we can't really do much about that. I don't really trade ranging markets. So the second one is the bullish trend. Now we looked at bullish trends already. Bullish trends are just when price is moving up, when buyers are in complete control, price moves up because it's a bullish trend. There's a bearish trend. So when sellers are in complete control, price moves down because it's a bearish trend. And then there's the transitions. The transitions are pretty much the most important part that you can see on your chart. At least for me, trading reversals, and for people who trade my strategy, transitions are vital. They're the most important part. And that's what we're going to be concentrating on over the next 3 days. We're going to be concentrating on transitions. So what exactly are transitions? Now, I call these transitions of power because you're getting transitions between buyers and sellers. We're getting transitions between who is in control of the market. So I've already shown you this chart. Now I've just highlighted a few extra areas of it. So here, sellers are in control of price. We got bearish trend, bearish candles, obviously sellers are in control. Then this here, this is the transitionary period. This is where, we start to get a transition from that trend controlled by sellers to a trend controlled by buyers. Now, this is the key. This is where you want to enter the market when you start seeing transitions. This is where you want to start preparing to enter a bullish trade and ride this up, etc. So transitions are just areas in which buyers or sellers start losing control of the market and the power transitions to the other side. So in this case, we got a nice strong bullish trend, but here where it transitions, buyers start to lose power and sellers start to gain power, and then we get this bearish trend here. Then here we start getting a transition again. We go from price being completely controlled by sellers. You could see it's completely controlled by sellers because these candles have big, strong bearish bodies. It's a strong bearish trend. So we go from price being completely controlled by sellers to this candle here. This candle, it starts to tell us that sellers are no longer fully in control of the market. Buyers are fighting back. I mean, we got this big, long, lower wick. It just tells us buyers are fighting back, and this is the key. This is where you want to start thinking about entering a trade. So you could ride the transition, the reversal up, and then it transitions again and then back down. So the market moves, like I said, in 4 stages. You got your ranging bullish trend, then bearish trend, and then transitions. What we concentrate on mostly is the bullish trend, bearish trend, and the transition. We try to enter in when price is transitioning between buyers and sellers. Now again, for everyone who's joined late, this is very basic stuff, but we're going to be talking about the basics before we get on to the more advanced stuff. So this is kind of like a perfect reversal. It's a perfect transition of power. Now, I want to explain to you step by step exactly what's going on here. Can you guys still hear me? All right, cool. All right, I just wanted to check because it looked like the chat room had frozen. Awesome. Okay, so I want to go through step by step, looking at this setup here. What exactly is happening here between buyers and sellers? Because I want you guys to understand exactly what is happening, who is in control of the market, because that is the question that you guys have to always ask yourself. It doesn't matter if you're trading my strategy, if you're trading a strategy on a 1-minute chart that's completely indicator based, you always have to ask yourself, who is in control of the market? Who is in control of price right now? It is the most vital question that you can ask yourself when you're trading Forex. When you're trading any market, because you need to know who's in control of price. If you take a short trade, you need to know for a fact sellers are in control of price. If you take a short trade and you ask yourself who is in control of price and you analyze your charts and you find out buyers are in control, you don't want to be in that short trade. That would just be silly. You're in a short trade. You're trying to sell with sellers. You don't want to be selling when buyers are in control. So as I go through this, I'm going to keep referring back to that. Who is in control of price? Who is in control of price? Who's in control of the market? Because it is vital to know that at all times when you're trading. You know, you should write that on your wall. Whenever you take a trade, always in your mind ask yourself, who's in control of price? I still do it to this day. I'm always asking myself, who is in control of price? Because if that answer ever comes back opposite to the trade that I'm in, so if I'm in a bearish trade and I'm selling, and I ask myself who's in control of price, and I see that it's buyers, that's a bad sign. I should be out of that trade. And that question is vital. So remember it. I'm going to keep referring back to that these whole 3 days, and I'm going to be referring to it quite a bit while we dissect this setup here. And after this, we're going to switch over to some real charts, and I'll show you some real setups and how all of this can be applied to actual real trades. Because it's all well and good showing you diagrams here. I mean, this isn't a real chart, if I remember correctly. This picture's been on my computer for a long time, but if I remember correctly, this was just done in Photoshop. So it's all good to, show you diagrams, but you have to refer back to real charts, and I'm going to show you all this on real charts. So let's dissect this here, and I'll show you guys exactly what's happening here. So candle 1, this first candle, what does this candle tell us? We have a lower wick here, and then we have this nice strong bullish body, very tiny upper wick, almost indistinguishable. So this tells us that sellers, for the period of this candle, so imagine this is a 4-hour candle, for these 4 hours, sellers tried to push down, they couldn't maintain that downward movement, and buyers took control of price and they pushed up. So this is a bullish candle. Buyers were in control of price. Buyers being in control of price for one single candle is not very significant. But then you get this candle here. Now this candle again has, a bit of a lower wick, but not really that much. Then buyers take control of price, push up, has a bit of an upper wick, not that much. Overall, this is a strong bullish candle. I mean, it has a big bullish body. We can tell here that buyers are almost in complete control of price. Next candle, pretty similar. I mean, small lower wick, nice strong bullish body, buyers are in complete control of price. Next candle is a bit smaller, okay? So what does this candle tell us? Does anyone know? I mean, feel free to type it in if you know what this candle tells us. Some people are wrong, some people are right. It's not indecision. This candle here, this one right here, I got a new mouse today, guys. It's a bit too sensitive. I can't draw my... Oh, that's better. I'll put down the sensitivity. Okay. So this candle doesn't say indecision, but it does say that, buyers are still in control of price. Obviously, they're still in control. Sellers have not taken control of price. Still has a nice bullish body, but it's not as big as these two candles. So it tells us that, perhaps, possibly buyers are slowing down. Alone, this candle doesn't tell us much, but it tells us that they might be slowing down. So we might start looking for a possible setup here. It's just like someone's saying right now, loss of momentum. That's what you would call it. It's a loss of momentum. It could be near resistance. It's just losing a little bit of momentum. So that's what this candle tells us. And then this candle here. Now this is the important one. What does this candle tell us? Indecision. Frank, it doesn't tell us reversal. A lot of people say that. A lot of people think this is a reversal candle. It's not a reversal candle. Price can continue straight on the uptrend after this. It can continue in a bullish trend. This candle indicates indecision. So indecision, it's a pretty simple concept. Buyers and control the market all the way up here. Then buyers try to push up. They get here, and sellers say, no, we're not going to let you push up any further. We want to take control of price right now. So sellers push price down, closes with a bearish body. It has a small lower wick. So that tells us buyers fought back too. Sellers push down to here, buyers fought back, close with a small body. So it doesn't say with any degree of certainty that sellers are in control or that buyers are in control. It just tells us price is undecided. Buyers and sellers are in a tight struggle at the moment. We don't really know for sure who's in control of price, but this is when we start to act. And this is where you ask yourself, who is in control of price? Because you are asking yourself that all the way up here. Who's in control of price? 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 The answer was always buyers, 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 buyers. Then when you see this and you ask yourself, who is in control of price? What's the answer? Neither side. It's a struggle now. Buyers and sellers are kind of equalizing. Sellers are definitely fighting back. We're not 100% sure who's in control of price right now. Hedia is saying charts are never as clear as this. I know charts are never as clear as this, but I said earlier that, I'm showing you guys a simple diagram where it's very clear because I want to explain the concepts. Then we're going to switch over to real charts and I'll show you it on real charts. On real charts, it's a little harder to understand, but, learning the concepts that I'm showing you right now, you're going to be able to apply it to real charts. Even though it's less clear, it's still there on real charts. Okay? So okay, yeah, that's pretty much it. What everyone is saying, there's no certainty in the market direction just by seeing this candle. There is no certainty. But when you ask yourself who's in control of price, the answer is I'm not sure. Buyers and sellers are in a tight struggle. I don't know for sure who's in control of price. So I can't take a trade right now. I can't take a trade based on this because I'm uncertain. But then we have this candle here. Now, this candle tells us that sellers are in control. It's quite obvious. Buyers tried to push up, sellers to control the market. They pushed down. They made a lower low. Lower low is extremely significant, but we're going to discuss that on day 3. We're going to talk more about lower lows, lower highs, etc. on day 3. So this candle, this is the one that tells us sellers are in control of price. Sellers are taking control of price and they've started pushing down. And this is where I enter the trade. I enter as sellers start to take control of price, and I write it down. Hopefully as far as it can go, but sometimes I'll get out before before it goes as far down as it's going to go. So when you ask yourself here on this candle, who's in control of price, and the answer is sellers. Sellers have now taken control of price. This is where I enter, because this is the start of a new trend. This is where it turns around. So this is where I act. This is where I enter, because I'm asking myself that question: who is in control of price? And now it's sellers. And my entry requirements have been met, and I'll teach you my entry requirements over the next 2 days, but my entry requirements have been met and I enter the trade. Yeah, questions at the end, guys. Just give me 1 second here. Okay, that's not working anymore, unfortunately. I had a script that was supposed to be spamming questions at the end the whole way through the webinar, but clearly it's not working. Oh, there it goes. It's triggering again. Yay. So, we've come to the end of the slides. Yeah, we don't need those two. Let's switch over to some real charts. Hold up a second, I'm just getting the charts up here. Okay, so let's switch over to real charts. These are real charts. Here there's some trades that have been taken over the past week or two. You're looking at an 8-hour AUD USD chart. I realize not everyone has access to 8-hour charts. I trade 8-hour charts quite a bit, but you don't need to trade this on the 8-hour. You can trade it on the 4-hour. You can trade it on the 6-hour, 8-hour, 12-hour, daily. These setups are pretty much across the board. Some setups that form on the 8-hour aren't necessarily going to form on the daily, but just this strategy can be adopted on any time frame, really. So let's look at a few setups, and I'm going to discuss these basic candle concepts that I've gone through just now. I'm going to discuss these basic candle concepts, and I'm just going to show you how they can be applied to real trades and recent trades. And I'm going to show you how sometimes they don't look as perfect as who suggested that? Heidi? No, Hedia said that on real charts they don't look as good as the example I showed, and I completely agree. 90% of the time setups don't look that good, but the same concepts can be applied. So I'm going to show you exactly how all that can be applied on these charts and on these recent setups. We're going to look at, I don't know, let's say 3 or 4 setups. We'll start with AUD USD because there was 2 decent ones on AUD USD. Okay, I'm just going to get the highlight tool. So this is the first one on AUD USD. Here we have, let's start with this candle here. So here we have a nice strong bullish candle. Yeah, this is a live chart. This is a live 8-hour chart. Price is moving now. Hasn't got any open trades at the moment, but yeah, this is a live chart. It's on a now Parry MT5 demo account. I use demo accounts whenever I do webinars because I don't want to show my real account to 1,000 people in a webinar. So it is a demo account, but they are real charts. So let's discuss these 2 setups here. we'll look at the first setup here. Now we're going to dissect this setup just like we dissected the setup I was showing you, the example one, but this setup here is real. This was a trade that some people took. Some people in the advanced course took this trade. It worked out well, but you can clearly see just from looking at it that it is not as perfect as the setup I showed you, but the concepts are still there. Look at this candle here. What does this candle tell us? It tells us buyers are in control of price. This candle here, what does it tell us? It tells us buyers are in control of price. This candle here, what does this candle tell us? So if you're asking yourself that question, who is in control of price? This candle tells us buyers and sellers are kind of struggling right now. This candle tells us, again, buyers and sellers are struggling right now. Is that just an issue for Helen, or is everyone not able to see right now? Is everyone else able to see my screen? Alright, Helen, you're just going to have to refresh. Alright, sorry guys for stopping there, just... so let's keep going. So this candle here, this tells us that buyers and sellers are struggling. So these are two signs of indecision. Unfortunately, this indecision isn't forming on a resistance area, so I don't really pay attention to it. It's not something I would trade. We're going to learn more about support resistance tomorrow. That's a subject we're discussing tomorrow. So please, no questions about support resistance. It will all be covered tomorrow. So far in this trend here, we have two strong bullish candles. Buyers are in control of the market. We have some indecision. Then we have another strong bullish candle. So again, buyers are in control of price here. And then it hits our resistance area. And in our resistance area, what do we see? We see this candle here. Now, asking yourself that question when this candle forms, who is in control of price? The answer is buyers are still in control of price, but momentum is slowing down again. You know, as compared to this previous candle here, momentum is slowing down, buyers aren't as strong. Then you get this candle here. Now this is the important one. This is the true indecision candle. You know, we start to see a red body, lower wick, upper wick. You know, this candle here, it tells us, you know, buyers and sellers are kind of equalizing. Sellers in this case even have more control of price. So the kind of reversal has already started overall, but you know, you can still enter this trade. This trade still has potential to enter. Marcus, awesome point. With no higher high, but this candle here has a higher high, this one here, but there's no higher high in the next one, which is something I look for, but we'll talk about higher highs in the next few days. It's not something we're going to discuss today because I just want to get over the basic candle concepts today. So basically what's going on here, we have buyers pushing up, you know, not consistently. There was a small lull in the trend here, but overall this is a bullish trend. Buyers were in control of price for the most part all the way up. Then we get them hitting an area of resistance and indecision forms. So indecision forms here. Now that's a sign to me that I might want to enter a trade. And what happens? Sellers take control of the market. You get no higher high, you get a lower low. So sellers break the low of the indecision candle and price comes down. So, you know, you can see here the same concepts I discussed on that perfect setup are displayed here. They're not as nice, they're not as clean, it's not as perfect, but the concepts are there. You got buyers in control of price most of the way up. They hit an area of resistance. Indecision comes in. If you start asking yourself who's in control of price, who's in control of price, here the answer is buyers and sellers are kind of equalizing and no one has full control of price. Then when you ask yourself that question here, sellers making you low, sellers have control of price now. I'm going to enter in a short. I'm going to write it down as far as I can. And you could write it down pretty much to the support area here. I don't use indicators, Marcus. But we'll talk about questions at the end. Sorry, you were answering someone else's question. Never mind, Marcus. It's counter trend. Well, of course, all reversals are counter trend. Reversal trades are counter trend because you're getting in at the start of a new trend. Now, I always say that I don't like trading with the trend. I don't really believe the trend is your friend, because trends, when they form, uh, you know, a trend is destined to end. The later you get in the trend, the more chance it has of ending. So I like to get in right at the start of the trend. This is the start of the new trend here. That's where I get in. I don't like to get in here at the end of the trend, because that's where the trend has a lot of potential to end, and that's where I'm going to lose out if I enter here. Each to their own with your trading style. But I do trade counter trend. I do trade with the trend, counter trend. But like the chatbot is spamming, and like some very nice people here are telling everyone questions at the end, I'll let you guys know when we're opening up for questions. So let's keep going. So right after that, we have another trade. Questions at the end, guys. Yeah, so right after that we have another trade. This trade here. Now this one is a bit better looking. It's more like the example I showed you before we switched to charts. It's not perfect, but it's a lot better looking. So what do we have here? We have strong bullish candle. Well, not strong, but a bearish candle. Sorry, sellers are in control of price. You ask yourself, who's in control of price? Sellers are in control of price, and of course they are, because you entered this trade under the assumption that sellers are in control of price, and you were right, because the next candle comes along, sellers still in control of price, pretty strong control of price. In fact, it pushed down all the way in a single candle. So sellers are in control of price. Then you get this candle here, this candle, sellers are no longer in control of price. Now we're kind of seeing buyers fighting back, and they're fighting back at an area of support where you would expect them to fight back. So sellers and buyers are kind of equalizing. And you get this candle here. Again, this is even a stronger sign that buyers and sellers are equalizing. You're not 100% sure who's in control. So when you ask yourself who is in control of price, the most important question in your trading, the answer is buyers and sellers are equalizing. No one has control of price at the moment, but it looks like control is switching over to the buyers. Then you get this candle here. Now, this is the entry candle. This is where I would enter the trade. It pushed up. Again, this candle tells us that buyers and sellers are kind of struggling still. So having entered here, I would be somewhat worried when this candle closes. But overall, it has got a higher high. It has got a higher low. So this sign is leaning, this candle is, when you ask yourself who's in control of price, it's leaning towards the buyers. The buyers are more in control than the sellers in this candle, because they've made a new high, sellers have not made a new low. Candle is closed with a bullish body, so this is a pretty good sign. Then this candle here, buyers in control of price completely. This candle here, buyers in control of price completely. This candle, well, not completely, I mean, it is losing momentum, but it has a bullish body. It has no lower low. It closed higher than it opened, so it's a good sign. Yeah. Then you got this candle here. Now this candle suggests sellers might be taking control. This was a Friday, so a lot of people would just close out here because they don't want to hold their trade over the weekend. That really depends on your trading style. If you hold trades over the weekend, had you held this trade over the weekend, you still would have been successful anyway, because it would have pushed up, and it would have ended in a positive trade regardless. Had you closed it out here, it would have been positive, or had you waited till today and closed it out up here, it would have been a positive trade. So you can see these concepts at work. These concepts I talked about, the basic candle concepts, just understanding who is in control of price, buyers or sellers. When you constantly ask that to yourself, you can kind of start to see these patterns forming. Even here, I don't think we took this trade in the course. I didn't take it for sure, and I don't think anyone took it. But even here, you can see sellers in control. One candle, two candle. They hit support. We start to see kind of buyers and sellers equalizing. So when you ask yourself who's in control of price, buyers and sellers are equalizing. Then you got buyers taking control of price. So you start to see these patterns forming everywhere. Now, of course, it's not this easy. You have to consider where you're going to enter. You have to consider entry triggers, all that kind of stuff. And that stuff we're going to talk about more and more in the coming days. but the basic concepts are there, and they're quite simple. In fact, you just have to ask yourself all the time, who is in control of price, buyers or sellers? And when you start thinking about your charts in that way, when you start looking at your charts and you start thinking about them in that way, you can kind of start to see before it actually happens when price is going to reverse, when a trend is going to die, and when price is reversing. And that is the key to trading reversals. That is the most basic concept in my trading, just understanding price and asking myself who is in control of price. So let's look at one more example. I want to show you guys an example that's not so perfect. If I remember correctly, some people in the advanced course took this trade, some people made some profit, some people it hit their stop loss. So I want to show you a trade that, wasn't perfect. I'm also going to show you some failed trades over the next few days. I'm not going to show you any failed ones today because I just want to explain the basic concepts. But as I reveal more about the strategy, I want to show you guys some failed trades because I don't want to show you guys just winning trades because that will give you a false idea of how I trade. There are going to be some failed trades. This one was kind of like a half-half. For some people this trade didn't work out, for some it did. This one can be attributed to news somewhat, the reason for its failure. I'm pretty sure news came in and took this trade out here. How soon will it be emailed? Probably sometime in the next 8 hours. Probably less than that. Anyway, so I just want to discuss this one really, really quick, and then we're gonna do some questions and answers. So here, now this is not a trade I took. This trade, for me personally, it did not fill all my criteria. I look for perfect setups, but the strategy I teach in the course, some people took this trade based on my strategy. Some people that take trades that are slightly riskier. So I do want to discuss this trade because it is a trade that some people took. And it is not a perfect trade. It's kind of an ugly trade. It's a trade that's harder to understand. It's harder to tie in the concepts I showed you in that perfect setup to this. But I want to show you guys this, that way you can see that these concepts can be used everywhere. So who's in control of price? When you see this candle, you ask who's in control of price. Obviously sellers. Who's in control of price here? This is kind of indecision, undecided, but it's leaning towards the buyers because it's got no lower wick. It's got no higher high, so it's kind of undecided. But when you ask yourself who's in control of price, you'd say buyers and sellers are struggling, but it's leaning towards buyers. But then this candle comes along, and obviously sellers are in control again. When you ask yourself who's in control of price, you can't come up with any other answer than sellers for this candle because it is a strong bearish candle. You see this candle here, it hits a support area that we have marked, a pre-marked support area. And you see a long lower wick, a bullish body. This candle is a sign that buyers are struggling for control of the market. They're fighting back against sellers. It closed higher than it opened. So it's not a sign that buyers are in control, just a sign that buyers are taking control. This candle here would be where some people entered, and this candle here indicates indecision again. And then you got this candle that pushed up, and buyers were in control, but then they came back down. So this is a really messy setup, but overall you still see the basic concepts. Sellers are in control most of the way down. They hit an area of support, indecision forms, then buyers take control of the market. The control was short-lived, yes. I'm going to explain why in the next few days. We're going to look at this trade a lot, and we're going to dissect this trade a lot, because there's lots of reasons why this trade was not that amazing. But there was still potential to make profit in this trade. So we're going to dissect this trade quite a bit. But as you can see, the concepts are still there. Sellers in control, hit support. We get an equalization of power, then we get a transition of power. Buyers take control of price, they push up. Oh, you took the trade, Tim. Are you in the advanced course or? All right, cool. So yeah, you took this trade. I mean, you saw the concepts at work here, the simple concepts at work of, transitions of power. So, you know, I know the stuff has been somewhat basic, but like I said, this is the first day and we need to cover the basics. Hopefully, for those of you who are new to my strategy, who are new to Forex for Noobs, you understand these basics and they've helped you a bit. But now we're going to open up to questions. So now you can start asking questions. Okay. And can you please keep the questions specific to what we learned today? Because if you start asking about support resistance areas, that's all going to be covered tomorrow. Support resistance will be covered tomorrow in detail. I'm going to cover everything you need to know about support resistance. So we'll look at that tomorrow. But for today, let's keep it to candlesticks and price. Kim, you're asking me to look at 27th of February here. Do you want me to look at this setup? All right. I'm going to answer Kim's question first. Oh God, there's so many questions. It's going to be so hard to keep up here. Okay, guys, please stop asking questions for a second. Please stop asking questions, because if you stop asking questions, then I could get through the ones that have been asked, and then I'll ask you to ask questions again. So please stop asking questions for a moment. We're going to take a look at the trade that Kim brought up before we go any further, because it's a pretty good example of a failed trade, and we'll probably look at this trade further in the coming days. But yes, this was a failed trade. So you did have a nice strong bearish preceding trend. I mean, it wasn't overall bearish. I mean, that candle was, it did indicate buyers were fighting back. But overall, when you can take into consideration all these candles, it was a bearish preceding trend. It hit an area of support. We started to see an equalization of power between buyers and sellers. Then you get this candle here that indicates buyers are in control of price. So when you ask yourself who's in control of price, it's made a new high. You say buyers are in control of price, and you're in the trade while this candle is open. Then you get this. Then you ask yourself who's in control of price. You start to say indecision again. You get this. You say who's in control of price, again indecision. This trade, I'm pretty sure, if I'm remembering correctly, was taken by members of the advanced course. I think, no, I didn't take this trade, but this trade was taken, but it was closed out without any loss because of those simple concepts I'm teaching you today. This trade was closed out because, all right, let's say you've entered this trade, right? You've entered this trade under the assumption that buyers are in control of price because of this candle here. And, that's a good assumption to make. Buyers are in control of price, this candle suggests that. But then this candle happens, and what does this candle tell you? This candle tells you indecision. So you've entered a trade based on the fact that buyers are in control. If you get indecision in the middle of your trade, that is a bad sign. So, it's not a sign immediately to exit, but it's a bad sign. So maybe you want to give this trade another chance to keep going. But then when this candle closes, and this candle closes as an indecision candle again, and it hasn't made a higher high, you're asking yourself, who's in control of price? Who's in control of price? And that the answer is, it's indecision again. So you don't want to be in a bullish trade. You don't want to be buying when price is undecided. When price is undecided like this for 2 consecutive candles, you should jump out and people jumped out of this trade with a touch of profit, just a little bit of profit. Not significant enough to have taken the trade, but using those concepts that I've been talking about today, asking yourself who's in control of price. asking yourself that all the time, it allows you to jump out of trades early too when they're going bad, like this one was. Okay. Nick, do you use the same support and resistance lines for trading 8-hour time frame than you use for trading the daily time frame? Yes, I do. But let's keep this about candles. How soon do you move your stop loss to break even? After I close out my first target, which we'll be discussing on day 3. Do you determine SR levels manually? Yes, I do. SR levels are best determined manually. But again, SR levels tomorrow. I'm late. Yes, you are late. Do you relate momentum with volume? No, I don't really use volume in my trading. Is the 1 hour time frame reliable? That is a good question. 1 hour is the lowest I would go for my trading. Some people in the advanced course still trade the 1 hour time frame. I don't really trade it personally. Some people do with success. I wouldn't go any lower than the 1 hour though. My strategy works on all time frames, but the lower you go, the harder it is to read price action. Is your stop loss the same on the 8 hour as it is on the daily? Usually it isn't, no. Nick, don't you think candles really get you late in the trade? No, candles get you into the trade early. My entry on this trade would be right here. I don't really see how you could get in earlier on the start of a trend. If you're getting in down here, that's when the trend is fresh. That's when the trend has just started. You could ride this trend potentially all the way up to here, depending on if you want to hold over a weekend. So yeah, candles don't get you in late. They get you in early, if anything, compared to most entry methods. Muhammad, do you enter a counter trade? All right. Chili Palmer, nice name. I love that movie. Chili Palmer, do you find signals more reliable, OB? I got no idea what you mean by signals, OB. Do you find signals more reliable, OB? Is that a typo? Now I'm going to skip your question as I go down. I'm sure I'll answer it again if you retype it. So Muhammad says, do you enter counter trend trades even the uptrend is strong and the trend is in volatile trend? Not too sure what you mean, but yes, I trade counter trend. Even strong counter trend trades, I take them. I don't really care if it's if I'm going against the trend, but that's a personal choice. You don't have to. This strategy can be traded counter trend, or it could be traded with the trend. It's really up to you how you use the strategy. There are a few people in the advanced course who do not take counter trend trades if the trend is really strong, because they find that it's not as reliable. So it's really up to you how you decide to trade it. Personally, I don't really care about the trend. I don't think that counter trend trading is bad. I don't think it's as bad as people make it out to be. As long as you know what you're doing and as long as you understand who is in control of price at all times, trading counter trend is not half as dangerous as people suggest it is. But again, it's your own personal choice. You can decide. I store the statements of a trader who always closes his trades in profits. Can you tell me how it is possible? If you don't have a stop loss, you can always close your trades in profits. You could keep a trade open 4 years for it to go back into profit. That's the only way I can think that it's possible. But that really isn't valid to what we're talking about, so please keep it on subject, guys. Yes, Omar, there will be a recording. Same question. Okay, you guys can start asking questions again if you want. Yes, I will talk about stop losses. I will talk about everything. I'm going to cover everything, like everything you need to understand to trade this strategy. I'm going to cover. Today is just day one, so it's just the basics, but rest assured, over the coming days, everything will be covered in great detail. Okay, this is a good question. Do you use candlestick patterns? We could see some bearish engulfing patterns, hanging man, or some Western patterns such as double tops, head and shoulders. No, I don't use candlestick patterns. I prefer to look at candles as more than just patterns. I prefer to understand what price is doing behind the candle. So when I look at a candle, I don't look just at the pattern. I try to understand exactly what price is doing. That's why I'm always referring to the struggle between buyers and sellers. And I'm always asking myself who's in control of price. This candle to me is not just the shooting star, hammer, doji, whatever you want to call it. This candle to me is simply indecision. It indicates that buyers and sellers are now struggling for control of price. This candle here indicates indecision. Again, buyers and sellers are struggling for control of price. This candle that's forming right now at this very moment, on top of my area of resistance, we'll cover resistance tomorrow again, just in case someone hasn't heard that. So this candle that's forming right now, that to me isn't a doji or a hammer or a shooting star, whatever they're called. That candle to me is indecision. What we're seeing right now on the AUD USD 8-hour chart is indecision. Buyers were in control of price here. Buyers were, I guess, overall in control of price here, you would say, because it does have a pretty long lower wick, so buyers did take control towards the end of this candle, although it did close with a bearish body. But let's just say here buyers in control of price, but here it's hit our area of resistance. It's clear that buyers and sellers at this very moment are struggling. So I don't look at candles as patterns, I just look at them as who is in control of price, because that's what the candle is telling me, who's in control of price. Here it was telling us indecision, here it was telling us sellers are in control, and like I said, right now it's telling us indecision. So Bobby, as a newbie, should I stick to one pair, but there is no setups for weeks? Should I move to another pair and look for a trade? I used to say stick to one pair. Back in 2007, 8, 9, 10, sticking to one pair was not very hard. I mean, there would be so many crazy trades on a pair. Like if you were trading just GBP JPY, you'd take 6 trades in a week that made you 2,000 pips if you really wanted to, because pairs would move like crazy back then. There was a 3 year period where everything changed and pairs stuff started moving like crazy. But these days, you know, trades are not few and far between. That's wrong. But there's less trades forming on any one pair. So these days, it's probably better to open up to about 2 or 3 pairs. Um, if you're a newbie, open up to 2 or 3 pairs and trade 2 or 3 time frames on them. That should give you plenty of trades. Jota from Poland, what is the advantage of using 8-hour candles? Personally, for me, the advantage of 8-hour candles is that price action is a lot clearer on them than it is on the 4-hour. 4-hour charts are not messy, but they're slightly messier and they're harder to read than the 8-hour. They're just look at this setup here. So this is the same setup. This is it on the 8-hour. It's nice and clear. On the 4-hour, it's just not as clear. We still have those basic concepts that I've discussed today. We still have sellers in control of price. We still have indecision here on top of this area of support. We're starting to get a struggle, then we have that reversal. So we're still getting that, but it's just not as clear. For me, 8-hour charts are a lot clearer and a lot easier to read in terms of price action. But see, if you go up to the daily, then you're not going to get as many trades. The daily just doesn't give you as many opportunities to jump in a trade. I mean, this trade here, if you look at it on the daily, you can't really get into this trade. This trade here, see this here? On the 8-hour, it's that one there. That was tradable on the 8-hour. On the daily, not really. You don't get that indecision. You just get a straight move down. So the 8-hour is a nice time frame because it slots in nicely between daily, which doesn't give you many trades because the price action is too condensed, and 4-hour, which isn't as clear because the price action is too spread out. I find 8-hour to be the perfect time frame for me personally, but if you don't have access to 8-hour, you can trade daily, you can trade 4-hour. I mean, I still trade 4-hour and I still trade daily quite a bit. 8-hour is my preferred, but 4-hour and daily are perfectly fine to trade. What risk reward ratio do you use? I usually split my targets into two. I try to stick very strictly on my overall trade to a absolute minimum of 2-to-1 risk reward ratio. 1-to-2, sorry. Not 2-to-1, that would be absurd. So my target is usually double my stop loss. Personally, for me, that's worked out quite well. I win the majority of my trades, so a 2-to-1 risk reward ratio is absolutely fine for me. But the strategy can certainly be adapted to get a higher to get a better ratio if you want to. Kevin Costner, you got in a few pips higher and you were stopped out on which trade? Oh, wow, there's so many questions. I can't keep up. Alright, I'm lost. I can't find where. Kevin's not responding, so I'm going to go to the next question. Maybe Kevin will respond and then I could answer his question after. Kyle, how do you find a good reversal bar? Well, like I said, I don't really look at them as reversal bars. I just look at it as indecision. A good sign of indecision, the best sign of indecision, stronger sign of indecision, is a nice long lower wick, a relatively small upper wick, and a body that's opposite to the preceding trend. So this is the preceding trend here. The preceding trend is the trend, the sell trend, the trend of the bearish trend, sorry. So this candle, to be perfect, would have to have a smaller upper wick, would have to have a bullish body to show that buyers are definitely taking control of price, and a long lower wick, but it doesn't have to be this long. It could be shorter. That would be perfect, but usually you're not going to get your perfect indecision candles. This indecision candle here is good enough. This one is good enough. This one is good enough. Just as long as the candle is telling you that there is a struggle between buyers and sellers and it's on top of an area of support resistance, that's usually a good enough sign to start considering entering a trade. Um, will you teach how to pick and draw support resistance areas? Yes, I will. Support resistance areas will be covered tomorrow, guys. AUD USD. Sorry if I sounded annoyed there. I just keep getting asked the same questions over and over. Support resistance will be covered in full tomorrow. We'll talk about everything support resistance related, okay? Erwan, that is a very good point. If you try to combine both candles in an engulfing candle, you will get a hammer. Yes, you will. Engulfing handles are usually just signs of indecision. If they're forming on top of support, it might look like an engulfing candle on a 4-hour chart. When you pop up to the 8-hour, it'll look just like a normal indecision candle, like the ones I use. How do you cope with losses? Does it make you doubt your strategy? No, not really. Not anymore. Not for a long time. It did way back when I was new to trading, but yeah, not these days. You just really need to accept that you're going to lose a certain percentage of trades. If I was just starting out, I would put that number at about 50%. I'm going to lose 50% of my trades. And knowing that you're going to lose 50% of your trades before you go in, when you start losing them, you don't get as discouraged because you know what's coming. And you have to be realistic with it. When you're first starting out with a strategy, it doesn't matter how good you are. Well, unless you've been trading for years. Not how good you are, sorry, how good the strategy is. Unless you've been trading for years, you're not going to be able to take on that strategy and get an 80% success rate with it. You just have to accept that you're going to lose the majority of your trades, especially if you're new to trading. It's just how trading is. So you shouldn't get discouraged and change your strategy just because you lose some trades. Just accept you're going to lose 50% of trades when you first start out, and once you accept that, it's a lot easier to not get discouraged. Linda, do you check your charts 3 times a day if you're trading the 8-hour time frame? To be honest, I check a lot more than 3 hours a day I check a lot more than 3 times a day at the moment because it's still pretty cold here and most times I'm at my computer. But certainly in summer when I'm out and about a lot more, I really only check into my charts 3 times a day when I'm trading the 8-hour because you only really need to check in 3 times a day. You could even limit it to 2 times a day. I mean, if price is here in the morning, I know for sure it's going to take at least 2 candles to close before I could ever get into a trade. I'm going to need a candle to move all the way up here. Then I'm going to need indecision to form here before I could enter a trade. So, sometimes I only check in twice a day. It really depends. But yeah, about 3 times a day. If you don't have much time to check into your charts, 3 times a day, if you're trading 8-hour, is perfect. What do I think about Elliott Wave? Like I said, let's keep it on subject. I don't use Elliott Wave, and this webinar's not about Elliott Wave, so let's just keep it to what we've discussed today. Why do I use MT5 and not MT4? Again, not on subject, but just real quick. MT5 has a lot more time frame options. You see 6-hour, 8-hour, 12-hour, etc. It has a lot more time frames, so it's better for me. Murray, you're using our parry and it doesn't have 8-hour charts. I've heard some people having similar problems. I'm not sure why. You should probably contact our parry and ask them. They should be able to tell you or help you out. Some people have reported that issue to me, that they're using our parry and they don't have 8-hour charts. I really don't know why. These days I mostly just use our parry as a demo platform to do webinars. I don't really trade with our parry at the moment. Do I think built-in indicators are useless? No, they're just not useful to me. Alright, finally a question that's more on subject. If I stick to the daily charts, will I get enough setups? Yes, you will, but you need to look at a lot of pairs. If you're looking at just dailies, you're going to have to look at about 10 to 12, even 15 pairs. It's not as hard as you would think because daily charts, you only really need to check them once a day. So looking at 12 different charts, 15 different charts once a day is not really that hard. So yeah, you could get enough setups on daily charts alone, but you need to be looking at quite a few charts. But don't let that intimidate you. 15 charts once a day it's still going to take you like, what, 15 minutes to get through them all? If you spend a minute a chart, which you don't really have to unless there's a setup on there. So yeah. Is it advisable to use sell and stop orders? Yes, you can. Is this strategy good across all pairs or specific to some, Nick? It's good across all pairs. I mean, we're just trading price action. Price action is good across all pairs, again, across all markets. It's just the basic concept of price action. You can use it. It's not limited to by pair. It's not limited by market. You could use this in stocks. You could use this in futures. It really just depends. Nick, you are better than Niall Fuller. Well, thank you for that. I'm flattered. Uh, I try my best when I do these webinars. Jennifer, I'm new to Forex. I noticed that patterns always change when they hit SR lines. Is this always the case? It's not always the case, but you know, support resistance areas like we'll discuss tomorrow are just areas where there's buyers and sellers. So we know before price comes down here that there's buyers and sellers. Well, in this case, buyers because it's a support area. So price comes down here, buyers into the market. The candles are going to change. What is the shortest time frame for a trend to consider for reversal? What? Okay, that's a really good question. So what is too short a trend to trigger a reversal? So what's too short a trend? That's a pretty good question. I get asked this a lot, and a lot of people think that you need a long trade, a long preceding trend to trigger a reversal. So in this case, for this reversal here, the preceding trend was 2 candles. This preceding trend could have just been 1 candle. That would be enough. In fact, a lot of preceding trends, a lot of the trends that form the best trades are a single candle. And a lot of them are caused by news because when important news comes out in Forex and you get like this huge move, just a single candle, imagine this line as a candle, more often than not, those moves retrace. And when they stop, more often than not, they stop on top of an area of resistance or support. So you have this like strong single candle, bullish candle, it's just a single 8-hour candle because we're on the 8-hour chart. Then you get indecision forming here. This single candle here, this single candle preceding trend is more than enough to consider a preceding trend because the candle has stretched from here to here. Now, if the candle started here and came down, just this tiny amount, then you wouldn't really consider that a preceding trend. But a big single candle, a huge single candle that stretches all the way down, that is more than enough to consider a preceding trend. But we'll talk more about that in the coming days too. How do I set my targets? We'll talk about that on Wednesday. Nick, how long have you been trading for? Since I was 16 years old, but the first 2 years was in stocks and not in Forex. So Forex since I was 18, I'm 28 this year, that would make it about 10 years, roughly. Wow. I'm getting old. If I stick to daily charts only, will I? Oh, you've already asked that. So many questions. We're 15 minutes over time. Brendan, can you trade solely using price action like you were showing us? Do you use currency strength as a confluence aid? No, you can trade solely using price action. I don't use currency strength. Obviously, you can't trade solely on what I've taught today. because I've just taught some basic concepts today. We're going to tie all those concepts together over the next 3 days, and I'm going to show you how these basic concepts tie into the more advanced concepts, and how you could use them to take trades. So you can't trade only on what I'm showing you today, but you can trade with just candles and support resistance areas. You don't need anything else. Do you ever place your stop loss closer to the entry than the lower high of the indecision candle? Yes, all the time, but we'll discuss that on Wednesday. Guys, there's so many questions. Well, you guys can see, all you have to do is scroll up. I can't answer all these questions. I'm sorry. Doesn't matter, the broker. A lot of this is just discussions between yourselves, though. Bobby, can we enter a trade anytime whenever the trade comes, or do we have to wait for the Euro session or US session? You can enter the trade anytime. Whenever the trade triggers is when I enter. So yeah, I don't wait for specific sessions. Especially these days, with trading from your mobile phone. You're not as limited to trading a specific session. I mean, I personally I use Splashtop. It's not a trading platform. It just allows me to access my computer while I'm out and about. So I could just access my computer and I can see my desktop on my phone. And I have a pretty big phone. It's the Galaxy Note 3. It's a big screen, so I can see the charts pretty clearly. You don't need to trade specific sessions these days. You could trade whenever, just because you can either have a trading platform on your phone or you could access your computer from anywhere you are. So yeah, I don't really trade specific sessions anymore. I just trade the trades as they come. Obviously sometimes I'm going to be in bed and I'll just skip the trade because don't want to wake up for it. But you could trade the trades as they come. Nick, what's your anchor time frame, or do you just use 15 minutes? I never use 15-minute charts. So I'm not even sure what you mean by anchor time frame. If you mean my most common time frame, it's the 8-hour chart. If you mean the lowest I will go to, it's the 4-hour chart. Sometimes the 1 hour, I guess. If you mean the lowest time frame, I will look at when I'm trying to determine the price action in a currently open trade. It's usually only one time frame lower than the time frame I'm currently in. So if I'm trading the 8-hour, I'll drop down to the 4-hour, sometimes the 6-hour, to monitor the price action and get a better idea of what price is doing. I'm not sure what you mean by anchor time frame though. Linda, yes, I only trade reversals from support resistance areas. There's more than enough trades to keep me at my weekly target. Are you a millionaire yet? I don't really want to discuss my finances. Give me your tax statement, please. I want to see exactly how much you paid in taxes and how much you made this year. Some information is personal. I'm not going to discuss how much money I make. Do you use News, CG? Yeah, I use News. Lornet, that's I definitely use News and I factor it into my trades. Seems like a lot of the questions. Nick, do you set up and let the stop loss limit dictate the outcome, or do you nurse the trade? I definitely do not nurse trades, and I don't recommend anyone, especially new traders, nurse their trades. If you sit around and you watch your trade, you're going to jump out early almost every time. I'll check in every now and then, but I don't nurse my trades. If I'm in an 8 hour chart trade, I'll check in every 8 hours or so, and I'll just monitor the trade. But yeah, no nosing of trades. Bruce, you're not a millionaire. So subjective too. Millionaire in what sense? Are you a millionaire in the US or are you a millionaire in the UK? Different currency. Are you a millionaire based on how many assets you have or just how much money you have in the bank? Do you have to factor in your house, your car, and everything? I always get asked if I'm a millionaire. It's such a subjective question. What do I base it on? Nick, do you use trailing stops? No, I don't use trailing stops personally, but a lot of people in the advanced course do use trailing stops. They definitely can be used with the strategy. I just don't really like trailing stops. I never have. But it just depends. I mean, it depends on you and how you like to trade. I'm going to teach you how I do stop losses, how I do my targets, but as always I say, when you're using my strategy, it's not my strategy. I'm teaching you guys candle I'm teaching you guys price action. You then take what I teach you and you modify it to suit yourself. So if you think the way I do stop losses and I do my targets doesn't really suit your lifestyle, your personality, or just how you want to approach your trading, you can experiment and you could change that and you could make it work better for you. I mean, the coolest thing about the advanced course for me personally, is when I'm teaching people how I do stuff, people come up with other ways to do what I've been doing for years that are more efficient. And I just look at it and I think, wow, I never thought of that. So you shouldn't do exactly as I do. You know, if you find what I teach useful, use it, but then adapt it to suit you and to suit how you trade. Um, make changes to it. A strategy, you can't take someone's strategy and just trade it exactly as they trade it. You need to make the strategy your own. What's my success rate with this strategy? Um, Personally, I haven't done the stats this year. I think, and please don't quote me on this because I can't remember for sure, but I think last year on the 8 hour time frame, it was 83.4% or something along those lines. Um, but that's my success rate. I've been training this strategy for a long time. So, my success rate isn't really indicative of what your success rate is going to be because you're new to it. Um, I use solely price action. Yeah, it just depends. My strategy, the way I've been using it, and the other thing is I don't take many trades. So 83% for me, I don't take many trades. I take 1 to 2 trades per week personally. Um, you know, the strategy has potential to take a lot more trades. I just limit myself to 1 to 2 trades per week because that's all I really need. Um, so asking me what my success rate with this strategy is um, isn't really indicative of what your success rate will be. And certainly people who are taking more trades than me using this strategy, they're taking trades that aren't as perfect as the ones I take. Trades that are slightly riskier. Their success rate may be, 70%, 75, 65. As long as you have a good risk reward ratio, you can make profit even at 50%. Although, I wouldn't want to be trading at a 50% success rate, but I'm just saying. So 1 to 2 trades per week. How long does setup take? How long do I spend on preparation? Very little time. I mean, like, just as an example, if I was taking this trade here, I would check in, see this candle. I would say to myself, okay, I'll check back about 10 minutes, 5 minutes before this candle closes, and I'll just see how prices are, you know, if it's going to close exactly as it is here, then I would check in maybe, I don't know, I'd set an alarm here most times, but if I'm at my computer, I would check this every hour. If I'm away from my computer, which I'm guessing is what you're asking, I would just set an alarm around about here. Then when my alarm rings, I would a price alarm. I would jump in, but it didn't really break here. It didn't break until this candle. So most of my trades, before I enter, I manage with price alarms, because you could just set a price alarm just before your entry, and then come back to your computer or access it via your phone as price approaches that area. I'm not sure why you're asking Tim, but if you're asking me and you think my name's Tim, the room has a capacity, and these webinars are very popular. There were over 2,500 people registered. Some people sadly cannot make it in. Kevin, I'm going to be walking through the trade in detail. This is one of the trades we'll be concentrating on, this one here. And then we're going to be concentrating on this one here and a bunch of other trades over the next few days. The starting times of each candle really depends on your platform. Mine start at GMT +2. But anyway, guys, this webinar has gone about 30 minutes longer, almost, than it was supposed to, and the questions at the moment aren't really on subject. A lot of you guys are asking about stuff we're going to cover tomorrow, which I completely understand. You guys want to know that stuff, and it's cool. I just want to break this up into sections. First the basics, then the intermediate, then the advanced. So tomorrow we're going to be covering support resistance, which is a little more advanced than what you learned today, and you'll start to see how support resistance ties in with what you learned today and how you could use it. And then on Wednesday, on the last day of these webinars, I'm going to be discussing how to put support resistance and candles together to actually enter trades. So we're going to be discussing triggers, how to manage your trades, and stop losses. So I really hope you guys found this webinar useful. The webinar tomorrow will be at the exact same time as today's webinar. I'll send you emails with the access link and all that kind of stuff tomorrow. So I hope to see you guys tomorrow. If you don't want to miss out on the webinar, try to get in a bit early, because like I said, the webinar does get filled up quite quick. So try to get in early. Other than that, guys, I really hope you enjoyed the webinar. I will see you guys tomorrow.